Hey, welcome back to the Hub channel. My name is Brandon. We're doing our new high probability short-term live trading right now. The next 30 minutes is going to be the best 30 minutes of your day. We're going to be going over the market, what is happening right now. Last show's trade, Mike's super sniper guidebook giveaway, his current live trade, and then we're going to be taking a couple of your tickers. If you have any, by all means, put those in the chat right now. But let's go ahead and bring Mike in here. Mike, we have to talk about the elephant in the room, obviously, right away, because holy crap, last week's trade, what was it? You said 24 minutes? You were out with a 13.8% profit. Let's just bang that out the gate right now. How'd that trade go? Walk us through it.
Yeah, man, absolutely. Let's hop right in, and I'm going to pull up what I call a risk graph, and these risk graphs allow me to paint a picture of the P&L situation and where my profit is based on where the stock is. And this is the trade we got into. Actually, let me take you to a Hub chart here. Hub's got some really good charting software and trading software that I like a lot. But here was Cisco last week. And let me pull it up here. So Cisco came out with some pretty crappy earnings, right? It announced earnings. They were lower than expected. And on the day of that we were last together, Brandon, Cisco came out. It opened right here. And this is the reason that we were able to get in and out of this trade in 24 minutes. The stock opened right there. It dribbled up to and filled the gap. And during this rise in the day, we were able to get 13 cents on a $1 spread. I'll give you the math here in a minute. So we got filled as the stock was up. And then it dropped also during the day. And during that first 24 minutes, because of the volatility of the stock, we got in for 13 cents. We got out for a penny in 24 minutes. What? Yeah, that's how this can work. Here's the math. We sold a 52 call, and the 52 call corresponds to this thing that I call a line in the sand. So the 52 call was way up here. And so imagine we're in this trade and the trade makes money anywhere below 52. The news was bad. The stock tanked. It's Chicken Little. The sky's falling. Is there much of a chance that Cisco is going to bounce all the way back up here to 52? So that's the probability of this system. It's short term. Usually our average hold time is a week. But in this particular case, because of the stock movement in the first 24 minutes of the day, we closed it down for 1 penny, which is our rules, and we nabbed a 13.84% profit like that.
Yeah, that's absurd. It's good to hear about those profits and to see you get those a couple weeks in a row, Cisco being the second one now. Then you seem to be on a roll lately. And we watch these trades as they go down live. And I don't know if you guys have been watching the show for the past month or so, but Mike actually does these trades live, and you can follow along right with him to see how he sets these things up. And it's really cool to see. And I really appreciate that, Mike. Let's take a beat here a second. Let's pull back off this trade and let's check about what's going on in the markets. And oh my gosh, and I don't know if you've seen this yet or not, but did you watch Nvidia's earnings call yesterday? I don't want to spoil anything, but that's got to be talked about when you talk about the market. You got to talk in general about the markets and how much of a beast Nvidia is becoming with what's happening and how much it pushes things around for the rest of the market now. Anyway, go ahead. Tell me what you're thinking in the markets, what you're seeing.
Yeah, Nvidia, we do have to talk about, Brandon, and we're going to talk about it a lot today. But this is the markets. And you know, yesterday the report came out about the Fed minutes. And guess what, Brandon? They said, we're cautious about lowering interest rates. Yeah, we know. That news came out. You know, I use the term spitting the dummy. The baby with the pacifier gets upset, spits the dummy, laser market chasing the market's chasing news like a cat with a laser pointer. All of that. It's very skittish. One day, news. This was the CPI report that came out. It was too hot. CPI is inflation is rising. Oh, we're not going to get our interest rate cuts as soon as we want. Market tanks below this 5,000 level. This is so key to us right now. So CPI drops us back below the 5,000 level. And then jobless, the retail sales were lower than expected. That's good news. That means the Fed may cut interest rates sooner than later. And then the Fed officials come out and say, we express concern and caution about lowering interest rates too quickly. And the market not tanks, but drops lower. And, it's like every piece of news, Brandon, if it's slightly positive or slightly negative, the markets overreact. And so in this environment, it's very tricky for us to predict direction. So I still think the news that hasn't really changed, Brandon. I mean, it's been the same news, the same stuff for months, and the markets are behaving, erratically, and we've got to be careful. Well, I don't have to be careful. I'm sorry. I don't have to be careful. But if you're with market direction and predicting market direction, it's helpful. If I know the markets are bullish, I'll lean on bull trades, blah, blah, blah. But I'm opportunistic. I want to come in and find some good or bad news and snipe. And it doesn't really matter in this system which direction the market goes.
Which that's the best thing about your trading style. It doesn't matter where it goes. And you could care. We do talk about what's going on in the market. We talk about the Fed coming out and saying all this stuff, but really at the end of the day, it doesn't matter. We're looking at in the moment type of thing, and we're checking out things as they happen. I kind of anticipated them to come out and kind of say kind of what he said. I don't know. And I don't even know why they came out in December and said they're going to lower interest rates quicker. That just made no sense to me when they first said it too. I mean, we see inflation. We see what's happening. It's not going to happen, buddy. So I don't know whatever it is.
I don't either.
Go ahead. What else do you see there, Mike?
So yesterday, that Fed new minutes came out. We're going to be cautionary about interest rate cuts, and then we got a bit of a bounce. So that was a sort of a encouraging sign. And now when I look at the futures, Nvidia came out and blew their earnings out of the water. We're going to look at that more in a minute, but these are now the futures. We can anticipate where the markets will open by these things called futures. So these futures trade 24/7 from Sunday night to Friday night. And right now, the Dow futures are up 0.57%. Look at the S&P 500 futures, Brandon. We're now back up above 5,000, probably prompted by Nvidia's what analysts called eye-watering earnings. I've never heard that said before, but now as we're going to open here above 5,000 again, above, below. Now we're above. Will it continue? We'll have to actually wait and see. Cautionary, I would say yes, but there's always reports coming out. We get an inflationary report that's higher than expected, the markets will drop, and vice versa. So that's the climate we're in. So if you're trading stocks directionally, you're looking for a bullish market. I can't say that we're in one right now. Now, Nasdaq futures, tech stocks primarily. Nvidia is an AI chip stock, blew its earnings out, and now look at the Nasdaq futures. They're up 1.9, almost 2%, prompted by Nvidia's earnings announcement. So if you wanted to predict direction on any of the markets, for me, the Nasdaq would be the market that I would feel more confident about predicting a bullish prognosis. So let me put up the NDX, because then we can actually see the one sec here. Let me pull it up here. I can't think and type at the same time. Here we go. So here's the NDX. This is the Nasdaq. All right, so if I go back to here, you can see the Nasdaq set to open up at 17,882. And where is that on this chart? Well, it's just below this very strong line in the sand, a resistance line, dead on 18,000. In fact, in the Hub software, I can come in here. Oh, it's not going to give it to me on the index. I can't do it on the index, but on non-index type instruments, we can actually get the pre-market. But I know just by the futures that we're going to open up right about here on the NASDAQ. If the NASDAQ closes above 18,000, then I would have a quite strong bullish prognosis spurred on by the AI. Is it a bubble, Brandon? I don't know.
Oh, I sure hope not. I think you're dead on in calling that, but that AI narrative is just pushing the entire market and it's absolutely crushing it for Nvidia. So, what are you thinking trade terms? What are we going to set up for today?
Yeah, hey, let me ask you a question. Have you heard this song, Lydia, oh, have you seen Lydia? Lydia, the tattooed lady. You ever heard that song?
No. What
Okay.
should I? I'm going to go to YouTube and watch this thing. Should I? What? Who sings it? Who sings it, Mike? Tell me.
I don't know. I think it's because I lived in, my mother's British. I was born in London. I heard it in England, but
I
it's an
think you
English.
I think your mom done made it up, maybe.
She might have. She might have. But whenever I see
Uh,
Nvidia, that song goes through my head. So here's
I
Nvidia. Yeah,
oh
go ahead,
yeah,
buddy.
geez. Well, I was just gonna say this AI stuff that Nvidia's if you guys don't know, obviously, who doesn't know what Nvidia does? Okay, so basically they're making chips for the AI revolution. This helped AI crypto out yesterday so much that everything jumped about 28% in crypto yesterday. That's AI related as well, which is a huge move for crypto. So I think anything that's going to be tailing off this Nvidia move is going to just skyrocket as well. I think maybe ARM might start to move. We might see some of the other chips start to move. The Nvidia is leading the pack here and just leading this narrative. So it's just cool to see. And I don't know, it might be a bubble, but if you talk about Nvidia rising 1,500% over the last couple years, it doesn't seem like much of a bubble. Everybody's been waiting for Nvidia to relent here, and it just has not relented. And I see demand for AI, especially with Sora's new release this last week by Mr. Sam Altman. I think everything's just going to skyrocket even more because now we know that even with Tesla's little bantering back and forth between, oh, we've been working on stuff like Sora for years, they're going to be creating and needing processing power as well. So every company behind the scenes right now, even if they've announced it or not, is working on AI. So I just don't think that it's a bubble. I think it's a trend, and I think it's going to stay here. So you asked that question. There's your answer.
I agree with you, Brandon, as well. When I was in college, I came out of college and I got into expert system development, AI development. This was back in the early '80s. Yes, I'm old. Back in the early '80s, and I'm seeing evidence of the benefits of AI. It's in Chat GPT. You can speak to Chat GPT and have it create a beautiful image or write a book or a dissertation or a presentation. So the AI that's coming is real, and NVIDIA is skyrocketing 500, 600, 700. Now, I want to point out a couple things on the earnings announcement that really caught my eye. This, Brandon, is the classic best type of sniper trade ever. NVIDIA is now reporting a full year of results. They're reporting a full year of results in a single quarter. What? I got some notes here. Their revenues year over year have risen 265%. So last year to this year, revenues have increased 265%. What? They were expected to have earnings of $4.64 per share. They reported 5.16. That's a 25% blowout almost. Revenues were expected to be 20.6 billion in one quarter, and revenues came in at 22.1 billion. And in Yahoo Finance used the word, I'll read it, NVIDIA's eye-watering. Oh my God, really? Fourth quarter numbers show just how far the business has come in just over a year. NVIDIA just opened. Look where it opened. Ba-boom. Now, and then I've looked at the analyst recommendations. There's been a rash of upgrades by analysts. And now I'm looking at the charts. And this is where you want to begin to tune your eyes. We're going to put a trade on this one in a minute. So what I'm seeing here, and I'm going to give it a little time to breathe, but not too much. So I'm looking at support and resistance at round numbers. I call them lines in the sand, but really they're just support and resistance levels. And so what I'm noticing here, now, first off, this is all-time high territory on the stock. I mean, This is a classic stock setting all-time high, all-time high, all-time high. All of these are all-time highs, but it's wrestling at the moment with 750. Now it's never been at 750, but I know because of the way support and resistance works that it tends to exist at even numbers, round numbers. Check this out here. Down below here, Nvidia was dancing with 500. 500, nope. 500, nope. 500, nope. Okay, boom. Then it goes to 600, the next resistance level. Then it goes to 700, the next resistance level. And now it's now making a run above 750. So now I was waiting to see if it was going to come down. So now that it's making at least the preliminary sign that it's going to rush, and I think it will. I think institutions are going to come jumping in on and getting more of this. The question mark will be, is it overvalued? So we got to be ready in case an analyst comes out and says, wow, it's gone up too far, too fast. The stock is overvalued. So that's a potential risk in the trade. So then the question becomes, where do we put our line in the sand? Let me clean this up a bit so it's not, I don't have so many lines on the chart. So here, there it is. So far 750 is now starting to hold. So now I'm going to give it a bit more room. I'd like to sell here at 700. I would like to be confident that the stock's not going to reach 700 in the next 2 weeks, or maybe 1 week, depending on what's premium is available. So I'm watching it's dancing on either side. It doesn't look like institutions are yet ready to propel it higher above 750. So 700 looks really good for me for two reasons. The reason now is that Nvidia is now, it's going to change here in a minute. 700 is the closest I'd want to get on this one. So that's where I'm going to go. But before I do it, I'm also going to check maybe the bottom of these bars here. So you see what I'm looking at here? I'm looking at the high of that bar, the low of that bar, and if you draw a line there, it's right about 665. So if I could get a 665 trade, I would be really, really happy. So let's try. And the idea of the trade is really simply, we want to make money anywhere above this line in the sand at 665. What does that mean? Well, it means if the stock skyrockets, which it very well could do, we're going to make money. If the stock goes sideways, we're going to make money. If the stock drops, we're still going to make money. We'll still make money. We'll still make money. And we'll still make money if it drops, as long as it doesn't drop below 665. High probability, just the technicals plus the that's so funny, eye-watering earnings announcement. It just doesn't look like Nvidia has much of a shot of getting down to this line in the sand. So I want to make money above 665. How do I do that? I use what's called a credit spread. What's a credit spread? Get the guide. We'll talk about that in a minute. I'm going to do one and walk you through the structure of a credit spread. This credit spread is going to be designed to make money anywhere above 665. Can I say that enough? No, I don't think so. So let's go into a live simulated environment. I'm using Thinkorswim. I use this to teach with and to trade live in front of people with. And I'm just pulling up the option chain here. And these are the available options. Typically, I'll go after a 15-day, 2-week or so, roughly 2-week trade. But there's 8-week options available here too. And because of the eye-watering earnings announcement, option traders are feasting on options right now. So we might be able to get something for March the 1st. That's a week from Friday. Yeah. So I'm going to go down this chain here and find 665 and see what kind of credit is available. Okay, I see there's 9 cents. Now there's 15 cents. A rule of thumb, and this is in the guidebook, the spread width here is 2.5. So my credit needs to be a minimum of 25 cents or 10% of the spread width in order to have a chance to make 10% on this trade. It's not there. It's 8. I need 25. All right. Well, what if I was to go out to March the 8th? Let's sell some more time. And there's not enough there. Okay, that's fine. This is part of the game. You got to sort of figure out what's available and where the credits are. So now I'm going to go back to March 8th, and I need 25 cents. I'm going to vacillate between expiration dates. There we go. Now, Brandon, this is going to be our trade. I'm going to fill it and then explain it. 667.50, 665, 28 cents. Now 38 cents credit. Okay, now I definitely want it. Let me hit, let's see, let's go for 32 cents on this. That's definitely over 25 cents. Let's go get it. I'm going to send the order in, and then I'll come in and explain in a minute. Let's take a look and see what the working order is looking like now. Now it's down to 16 cents. Brandy, you remember last week, these prices in the first half hour of the market on a stock with this kind of news, the credits bounce around quite a bit. All right, so it was at 38 cents, 18 cents, 25 cents. I'm asking for 32 cents, not getting it. My concern is that if Nvidia starts rising, and let's take a look and see what it's actually doing. Let's go back to the hub chart here, and let's just see how Nvidia is behaving. All right, good. All right, so we're going to go back and see if we can get 25 cents now. I'm going to drop the price a little bit and just fish a bit and see if I can get 25 cents. Now, here's the deal. I'm not going to get 25 cents if Nvidia starts running up. And that's a distinct possibility here. And just watching the credits, they're moving all over the place here. 25 cents is not even available at the moment. All right. So here's what I'm going to do. I want my 25 cents. And so what I'm going to do now is sell more time. Instead of March 8, I'm going to go for March 15. And that has the impact of adding more credit. Why? Well, we're selling more time. I see now that the 667.50 is not available. I know there's a lot of moving parts here, everybody. Let's just see what I can work out here. Let's see, I'm going to try to sell a 665, the underlying strike. I'll tell you what the fast way to do it is right here. Okay, let's see. I want to sell 665, 660, and that's showing 32 cents. All right, we're going to get this one. This is what we're going to do, and believe me, I'm going to recap. It shows mid price at 35 cents. I'm going to go for that. Selling the March 15, 665 put, buying the 660. Mid price is 37 cents. Well, while I was talking, this is such a fun game. So while I was trying to figure out how to get that 25 cents, I got 35 on this particular trade right here. So this is the one we were going after. We got it, Brandon. We got 35 cents. The credit was 18 cents, 40 cents, 20 cents, 17 cents, and we caught 35 cents because we placed the order in this very volatile, high, what we call implied volatility or expense. Options pricing is all over the place. We put our order in and we caught 35 cents. Awesome, awesome, awesome. So now what I'll do is show you this trade in a form. So I'm going to show you exactly what I just did in case you want to replicate exactly what I did. So I sold the 667.50 and bought the 65s, and I got 35 cents. See if I can remember that. 665 put, and we bought 667. Sorry, 667.50 put. And we bought the 665 put, and we ended up getting 35 cents. Now, I'm going to give you the exit instructions here in a minute, because those are really important. But let me just show you what we did.
Wait, I was going to say, let's just recap a little bit here since we're going over this, but it looks like you don't want your trade. So as long as it stays above 665 now, you're gold, right? By March,
correct.
I mean, you put it out to March 15th, but you don't think you're going to wait till March 15th to pull this trade off. Most likely, if everything kind of goes with what you've done in the past, you should pull that trade off a little bit quicker. But as long as it stays above 665, which is, I think is a very good chance right now, you're going to be good. So I just wanted to recap that and see, okay, we're good to go. All right.
Yeah, well done. And that's, Brandon, it's actually 667.50, a little bit
Okay,
higher.
650.
That's
there
exactly
you go.
right. So so here's our and I think graphically, Brandon, it's important that we review like you just did. So now our trade is rough. That's our line in the sand, and we only lose on this trade if Nvidia comes back down, and the chances of that are small because of earnings, because of the stock gapping. Now, what I expect is going to happen here is now that Nvidia is basing above 750, it's not correcting, that we're going to see a rash of buyers, of stock buyers, and that will drive up to 800. I think 800 is in the cards on Nvidia, and if it could get there today, in fact, and as this rises, this could be another Cisco trade if Nvidia does in fact take a run, and that very well could happen. So this is another good one, very similar to the Cisco trade from last week. Now, let me talk math just a little bit, because you're probably thinking 35 cents. What good is 35 cents? Well, when you look at the amount of potential return on investment on this trade, that's 16%. And we're likely to be out of this within 7 to 8 days. So if you can make, I'm not even going to expand your expectations. Our average is 10% on this system every 8 days. So 10% every 8 days is what we normally get. This is an exceptional one. It will increase our performance. But the point is 10% every 7 days interesting enough to you? To me, it is. I could literally take the same $500, let's say, and trade it once a week and generate 10% once a week. And there's 4 weeks in a month, so that's, I don't even like to say it, Brandon, that's 40% a month on the same money. So this system is very similar to the movie Moneyball, where the Oakland A's got people that got on base, whether they walked or hit, and they ended up going to the playoffs in baseball. And it's the same. Get on base, get on base, get on base, get on base. No home runs necessary. Just get on base and get to home base with 90% historic accuracy in terms of our performance, Brandon.
I love that strategy too, and it makes the most sense in the market. If you're always swinging for the fence, if you're always trying to get that home run, that's exactly what happens in baseball. You strike out. You strike out because you're swinging too hard. Those singles, everybody can consistently hit singles. So that's why I love your trading style the most, Mike. I love it the most.
Oh, thank you.
What? Oh man, I love this trade too. I love what you put on. Where can people get your guidebook, Mike? We haven't talked about that yet. Let's throw that in there because we got to wrap up here really quickly, which is unfortunate, but.
Oh my God, time flies. I love this
Yeah,
game. I do this every morning. I get up and I do my meditation, I walk my dog, and then I get some coffee and I sit and I start looking for these candidates, place a couple trades, and go off to the beach. It's freaking awesome. So, yes, it's good. It's a good life here in Costa Rica. And Snipers is a part of it for me. Yeah, I'm very conscious that there's a lot of moving parts here. Now, in order to give you something to stand in and be able to follow Brandon and I every week, I put together this guide that's comprehensive. It takes you through every step that I take in front of you quite quickly. I realize, but man, if I slow down too much, we don't get as much credit on those trades. So that's why I move fast. In order to help you navigate as I move relatively quickly, is we have this guide that will walk you through every single step, how to find these candidates, how to set your lines in the sand, how to construct a credit spread, how to exit the credit spread and manage the trade. All of that is in the guide, Brandon. And guess how much it costs?
Well, I know, so that's cheating. So yeah.
It's free.
It's free. It is.
It's
Well,
free.
I appreciate that, Mike. If you guys don't have the guide, go get it right now. Go check out all of how Mike does his trades. You can also follow Mike. I mean, if you get involved with Mike, his trade coaching, he's going to tell you exactly how to get out of these trades. He'll walk you through his Nvidia exit, his Cisco exit, and you'll be able to see the entire picture, how these things play out. But I love your trading style, Mike, and I love these trades every week. This one is a solid one. Obviously, the way you explained it, it looks like this is a sure, nice, easy base hit, which that's what we want at NVIDIA. Trading before earnings is something that I would have done in the past before watching your trading style. That would have been something that I gambled on, but I don't have to do that anymore because we can walk through this after the fact and trade easier and sleep at night, which I do love. But if you guys haven't already, go check out Mike's sniper system. Go check out his guidebook. Go get that thing. And as for now, we will see you next week back here on the show, and we'll go over everything all over again. We'll see ya.